Okay, this is now on video recording. So now, officially we're recording it. We just finished discussing the quiz, but we haven't discussed everything. So this is for anyone who is not present at the online review session. I know a number of you were not there in the last session, and I apologize. I couldn't record it, but this one is being recorded here on in. All right, now, where is Rohan? There he is, yes. Okay, awesome. Now, quick question. Before we move on to the activity, would you like to watch the video first or do the activity next, or talk about the project? I'm open to everything.
Let's go in order. Let's just continue with the video.
Let's do the video. Awesome. So I watch CNBC religiously only for you. Let us see. Where am I? What am I doing? Share screen. Where is it? Share screen. Share this one. Share. So on your screen is a video now. Yes?
Yes.
Awesome.
Yes,
let's
sir.
watch it. Ready?
Ready?
Could you hear Brian Sullivan?
No.
No.
You could not hear the sound from Brian Sullivan?
No.
Oh my gosh. So this setting is important. Okay, just give me a minute. Stop share. And when I say share screen, where is, oh yes, there it is, share computer sound. Now we'll be good. Let's try again.
Friend, you sent me a note saying that.
Could you hear it now?
Yes.
Yep.
Awesome. Yep. Let's go. So this is exactly what's happening in the markets right now. Enjoy.
There are some things technically that you're seeing that you've only seen or have happened 4 times in the last 50 or plus years. What are they, and does it give you some optimism that a bottom is near?
Brian, that is absolutely correct. This is only the 4th time we've seen all these breadth measures from a technical perspective reach zero. And the last several times we have seen this, you had huge opportunities to be buying stocks. Not only are these indicators at zero, sentiment gauges that we look at are all at very, very washed out levels. And now is the time we need to start leaning in and start buying stocks in here. Yes, the news is really negative with the coronavirus, but a lot of it is already baked in at this point in time. And when we have gone to be more than 20% below a simple 200-day moving average, Brian, looking back into the 1974 crisis, looking back in 08, 09, looking back at where we were in December of 18 when we were on the show talking about when it was time to buy stocks, this is when you step up and you start leaning into it and start buying stocks here.
You know, however, though, Craig, we hear often, in fact, we heard at the top of this show, that technicals don't matter much right now in this kind of an environment. What's your answer to that?
The answer to that is flat out that is incorrect, because you look at some of the Fibonacci retracement levels, you look at support levels. Yes, you're breaking through some of these support levels because of the coronavirus and concerns about loved ones and the things like that and selling in these stocks. But you are seeing support levels being obeyed, and you are seeing trend changes starting to happen. And the technicals do matter, because right now earnings don't at this point in time, because we have no idea what the revisions to these earnings are going to look like. So support levels do matter.
You said might be time to start looking at certain stocks. Is there any stocks or industries that to you maybe look more washed out than others and would be a better long-term bet? Because you are supposed to buy low and sell higher.
Absolutely. And if you pull the playbook of what happened back in 08 and 09, everybody scrambled to get back into the market. You even saw that coming off the lows in December of 18. So some of these companies, like the restaurants, for example, whether it's Chipotle, whether it's Wendy's, whether it's any of those kind of names, they are down more than 50, 60, even in some cases 70% from the highs you'd seen back in January. Also, look at what you're doing with the airlines. There is going to be some support coming from a fiscal stimulus package for those. And I suspect you're going to see the same for the cruise lines. All those kind of names are tremendously sold off, well overdone, and you want to step up and be buying some of those names at this point in time.
But,
also, names like
Nike.
Hold
on, Craig. I'm going to jump in because I'm sure I know you've got fundamental analysts there as well, and everybody's still working despite not being able to be in the same room. I'm sure there is some talk that some of these stocks, and I'm not going to, no way am I going to name any names, are going to go to zero. I mean, there's going to be bankruptcies in some of those industries.
There is potential for some of these to go to zero, as you would say. But again, think about what is happening with fiscal policy. They're going to put some processes in place, make liquidity available to a lot of these restaurants and to a lot of these airlines.
Okay, I am going to stop the sharing now. Okay, anyone, any comments?
So he was talking about how they were measuring the markets something with a Fibonacci
Retracement, yes.
retracement.
One-on-one office hours. That's
Okay.
exactly where my next poll comes in. So I have a poll on, it's not poll everywhere. This is a poll on, it's a poll on Zoom. So let's see if I have a poll here. Polls, yes. So I have something in my mind. Let's see if you agree with that or not. So I'm going to launch a poll right now. This is about my office hours. If you need to know any questions like what's the difference between technical analysis and fundamental analysis, one-on-one help with your project, one-on-one help with what Patrick got on last Thursday, your part B assignments, any miscellaneous issues just to discuss one-on-one, I am at your service.
I was asking that particularly because coming from a programming background, that's an exercise that actually yeah.
I'm so proud of you, Nick. Very nice question. Love it. Yes, that's exactly the same Fibonacci series that we're talking about in stocks. So you go back halfway down the previous high, and yeah, we can discuss that one-on-one if you're interested.
All right, that sounds great.
Yes, brilliant job.
Are there kind of time frames that are associated with these afternoons or mornings? Because I have classes that kind of usually interfere with your office.
Yes, I understand. And the solution to that, Mr. Gomez, is we could even do a quick session on the Saturday on request. Not a problem. Okay. Like I said, since we've gone online, we could schedule it to suit your needs. I could always take out some 10, 20, 30 minutes, even an hour on a weekend. That's not a problem. Yeah. Okay, I'm going to end the polling now. It's been a couple of minutes since we launched it, and I'm going to share the results with you. It looks pretty unanimous, it seems, that with the other class I teach. So what I'll do is I'll have common office hours, but at your request, we could do one-on-one as well. These will be on Tuesday and Thursday afternoons. And if you need special consideration, we could hang out on Wednesday morning or Friday morning. All you need to do is use the same link that I'll give you on Wednesday and Friday morning. Just let me know you're coming, because I might get blindsided that you're there and I'm not there. Okay. Now over to Rohan. Rohan, would you be able to launch the activity, or should I pass on the blank to you?
I can talk through it, but if you could put it up.
You can share your screen. You can share your screen. Go to the bottom of your Zoom, and you'll see that green icon which says share screen.
I agree, but I'm taking this on my phone, so it's on my laptop.
No problem. I'll do it for you then. You walk me through it. How's that? No. Don't be sorry. I understand we have our constraints, man. It's okay. The only reason why I sort of technically call on you is because you deserve these honors. You were the first one to turn this assignment in, and I noticed that right away, and I graded it right away. So thank you for that. It's much appreciated.
Thank you. We can get started whenever you're ready.
I am just about to get started. Just hold on. I'm launching it, and you will tell me what to do. Can you see my, no, you cannot see my screen, obviously. Let me just, first question to the class is, can you see my Excel now for 6.1b?
Yes, sir.
Yeah. Awesome.
Yep.
Awesome. Okay. And you can hear me and Rohan as well, right?
Yes, sir.
Perfect. Okay, Rohan, let's go. So we use a PV function here, correct?
Correct. But before we get started, we just create another column on starting from G2, that's going to
Okay.
be the coupon payment or coupon.
All right.
And then we find that by using the coupon rate times the par value or the face value.
Okay. So you don't really need this, but that's fine. I like it. So it's basically coupon rate times the par value.
I was going
Any
to say, couldn't you
questions?
just do that inside the function itself?
You could. That's what I said. You could do it both ways. It's fine. But this is, I agree with Rohan that this is more explicitly clear, especially if you're teaching a class, not your class, by the way, especially you're teaching a class of beginners in either Excel or finance. And luckily, you guys are not beginners in either. So, Mr. Gomez, you asked a very valid question there. May I move on?
Yep.
Okay. So copy that and go all the way to the bottom and shift control up and control V. Now, obviously, it's giving me a value because there's nothing in here right now, but we'll fix that soon.
And then we start off with the F4.
Wait. We asked the class, have you got it?
Has everyone got it?
Yes.
Yes, sir.
Great. Thank you. That makes me so happy. Thank you, guys. You're making my day already. Thank you. Go ahead, Ron.
Okay, and then we start off by at cell F4, and then we use the PV function to find the price of the bond, which is the present value of the bond.
Okay.
And then we equals to PV. The rate is going to be.
Question. So what is the difference between, so what rate should I use? Yield to maturity or the coupon rate for the next argument in my PV function?
The yield to maturity.
The yield to maturity is a market rate. Coupon rate will never change for the life of that bond. Okay? So go ahead, Rohan.
So we use yield to maturity, which is cell E4,
Okay.
comma, NPER, which is the years to maturity, so D4.
Okay.
And then G4, which is our payment. And then we can make
So
that
I want a
negative.
positive price, so I'm going to make negative payment. Is that all right?
Yes, negative payment.
Okay.
And then a negative face value or the par value, so negative B4.
Negative future value. Well, future value, that's par value would be available
Correct.
to me at the end. That's why it's negative future value.
Yeah, negative future value, and then type would be 0.
Any questions, class?
Everything is fine. The only thing I'm noticing is my last 4 coupon payments are giving me errors.
Yes.
Okay.
Yes. And the reason for that, Nick, I'm guessing without the H, is because we have a question mark here. We don't know the coupon rate yet.
Okay, yeah.
That's the reason. Good question. Thank you for asking. But so has everybody got this 1147.2?
Yes, sir.
Awesome.
Yep.
So what is the next step, Rohan? Tell me
We
to
use
press
Yep.
Control D.
Control D.
Okay. Now I'm going to do it. Well, no, I don't need to do it Mr. Gomez's way yet, because we really didn't need the coupon payment for this particular. So even if I delete these coupon payments, oh, what happened? Oops. G4. Oh, G4. Okay. Well, Mr. Gomez, yes, we do need your help. So instead of G4, we can say C4 times B4, right?
Correct.
So no change in the answer if I use that either. But yeah, I appreciate how Rohan separated it out. It makes things more visible, visually intuitive. Back to you, Rohan. How do you get the YTM?
Perfect. So we start off in cell E8 and we use the rate function.
Okay, we start off in the cell E8 and use a rate function. Rate. I can actually make this larger. So let's make it 250. How's that? Equals.
Much better.
Let me check with Christina really quick. Christina, are you there?
Yes, can you hear me?
Yes, we can hear you perfectly. Have you been with us so far? All good?
I'm following along.
Wonderful. Thank you. All right, let's go, Rohan.
Okay, so we use the rate function, and then
So we use a
first-
rate function.
Yep.
And then when you press the tab, so what I do is I type away RATE and press the tab key, which is below the tilde key. And number of periods is the cell
Would be-
D4. Sorry, you go
Yep.
ahead, Rohan.
D8.
D8.
I'm sorry. Yep. D8.
Thank you.
And then the payment would be negative G8.
Negative G8. Okay,
Your
so
present
first of
value-
all, we need to understand now. We are the bond issuer. So we are making these coupon payments, making the final par value payment, but we are receiving the price today. Okay. So that's what Rohan is doing. So minus G8, comma.
F8, which would be your
F8 is a price.
Mhm.
So we're
Yep.
receiving the price today and making the coupon payments and the face value payments in the end. Okay, everybody?
Right.
Sounds good.
Okay. If you have this in your head, so there are two sides of the bond. One is the side that receives a payment today, and the other is a side which receives the future payments and the par value payment in the end. So that's what you have to always remember in a bond. Let's keep going, Rohan. So F8 is the present value that is being received today. Now,
Yes.
future, if
And
I
then-
receive today, future value I have to pay, right?
So that's going to be a negative B8.
Negative B8.
Your type would be 0 again
Thank you.
at the end of the period. And then a
Yes,
guess
what's
would
your
be,
lucky number, Rohan?
6.
6%. We asked the class, any questions?
Any questions?
Thank you. Nope. Okay. So we press enter. And what is the next step?
Control D.
What? Okay.
The reason that you're
We
getting an
just
error
increased
on that
the
one is
guess
because
rate.
The guess rate is wrong. Okay. Let's
Yeah.
make guess rate
Yeah.
2%.
10%.
10%. Okay. Whatever you say.
so the yield to maturity needs to be higher than the coupon rate.
Let's see. Wait, hold on. Okay. Hold on. I need to make this 2%, two decimals. All right. So good point, Mr. Gomez. Wow, I'm proud of you. Now, so in this case, first of all, in this case, the YTM equals coupon, and therefore the price is par. Have you noticed that?
Yep.
YTM equals coupon, therefore price equals par. Very
Right.
important. Now, as soon as, go to the next cell, the YTM is, compare these, E and C. I'll hide this column for a minute. Now compare these two cells, E and C, E and C. The YTM is more than coupon, the price is below par.
That's because it's a discount bond.
Correct. The YTM is less than coupon, the price becomes more. YTM less than coupon, the price increases beyond the par. Finally, YTM more than coupon, you guess it. More YTM, less price. Less YTM, more price.
Yes.
Okay.
Discount.
I wanted you to appreciate that fact. That's one way to check whether you are doing the right calculation or not. Amazing, right? Finance is beautiful, I think. Let's go to the next one. Years to maturity equals
NPER.
NPER, number of periods,
And
rate,
then the rate, which would
comma,
be the yield to maturity, so E12,
okay.
comma, payment, which would
So
be
again,
negative
let's make the
G12.
payment and receive the price, right?
Yep.
Okay. So the payment is 80. Price
The present
is,
value is
go ahead.
F12.
Wait, so, oh yeah, G12, minus G12, comma, F12, comma,
Negative B12.
negative B12, comma,
And then end of the period.
0. Any questions? Let me just quickly, sorry. So now here the coupon and the future value are both negative, but the present value, the price today is positive in science. Good. I'm just going to do Shift Control 1 to round it off. Next step.
Control D.
Control D. Thank you. Shift Control 1 is really beautiful. Any questions? Can we move on to the last piece?
Yes.
Okay.
Oh, I have a question.
Yes.
Can you explain again why it was negative? Why the present value was not negative? Why the other two were negative?
Sure. Let me just, the answer to this question is this. I have never used a whiteboard. Let me try. So, answer to this is simple. It's not simple, it's intuitive. So look, if I draw a number line, this is times 0, 1, and 2. Sorry. 2. Let's assume we have a 10% coupon, face value 100 for this bond, okay? So what's happening in this bond in terms of this number line? What should I, and the current YTM is also 10%, so the price will be 10%, right? I mean 100, right?
Yes.
Okay. Now, so what happens here? Suppose I am the issuer. So these are the issuer's cash. Oh, terrible handwriting. I have text here. Ha. So I'm the issuer. What happens to me? How do my cash flows look like? My first cash flow is plus 100. Oh, back to draw. Plus 100. Oh, wait, what am I doing? Oh, draw, squiggly. Thank you. Plus 100. I received this money today. Now, what happens after time 1?
Do you get the payment?
I make the payment, so minus 10. So since I received the money today, I'm returning that now. What about the second cash flow? Again, minus 10.
10 again.
But I also return the principal, which is the face value, so minus 100. So this is your PV has a positive sign, and your payment and future value, PMT and FV, have a positive value. What we learn from this is as follows. The sign of this and the sign of this are exactly opposite.
Got it.
Perfect. Thank you.
That makes sense. Thank you.
Thank you. All right. Oh, wait. Back to sharing screen. Back to sharing Excel. We are at the last stage of our activity. Last 4. Back to you, Rohan.
Yep. So to find out the coupon rate, I worked out the payment first in cell G16.
Okay, you first work out the cell in G16. All right. Equals
PMT.
PMT, payment.
The rate is E16.
Rate is E16,
and
comma.
number is D16.
Number of periods is D16. Okay.
The
comma.
present value is F16.
Okay, so we are receiving the payment today, F16.
And then
future
the
value.
future value is
Wait, so
negative.
if we are receiving the payment today, my coupon payments would be negative, right? So I want to make coupon payments positive, so I'll make F16 negative. Okay, exactly what we discussed a couple of minutes ago. I want to have a positive payment, so I'll pay today and receive the payments later on. Okay?
Yep, and then your B16 would be positive because they have to be the opposite signs.
Yes, good job. So par value, future value is positive because payments are positive. And comma, 0. Enter. Ask your friends any question.
Any questions?
Awesome. Control D, Control D, Control D. And the last step is the rate. That's easy, right? Equals the coupon payment divided by the face value times 100. Well, it's percentage, so I should do times 100 equals G16 divided by B16 times 100. Doesn't like me. Shift Control 1, and I'll remove that and make it Shift Control 5, guys. Shift Control 5. Alt OE, 2 spaces, and then Control D, Control D, Control D. I'm done. Anyone has any question? Anyone is still struggling, missing out something? Well, no problem. We've recorded this, so you can go back and visit this again. Christina has a question, I believe.
Oh yeah. How did you get again the 9%, or how did you move the decimals over?
Equals this, the payment, divided by the face value times 100. Not 100, just that. And then I formatted it to percentage form. So Alt O E and then percentage with 2 decimals.
Got it. Thank you.
You're very welcome. So that's the end of activity B. Now we have a question on the project, which is going to be due on this Thursday, right? That's the next step. So I'm going to stop my screen share. We're done, almost done with the entire class for session today. I think Mr. Young had this question about what do we do with the project next? And I would like to give you a head start on that. Again, I'll share my screen, and I would particularly like to share my Chrome tab with you. Just let me know if you cannot see what I'm doing. Just jump in and say, I cannot see it. I'm going to go to Hunt Library. Then I'm going to search for Mergent Online. Essentially, go to databases, and you all know how to do it, right? Mr. Hall, you know how to do it, right? Mr. Hall?
Yep, I know how to do it. I lost my screen for a second.
No problem, no problem. So I go to Mergent Online, and I enter my credentials. Oh gosh, it has to happen now. Let me get my phone, excuse me. That was fast. I'm back. Whew. All right. So I approved myself, go into company. So Mr. Young, what is your company? Nike?
Wasn't Mr. Young's company Intel?
Yes, he just said Intel, correct. Intel Corporation. All right. So the next step says, hold on. The next step says what? Assignments, spring 2020. Spring 2020. Project deadlines. So that sheet, I'm pulling up the project deadline sheet, according to which we are missing out on the capital structure. That's it, just the capital structure. Oh, you've already done that, haven't you? Okay, good. So based on my feedback, what you have to do is actually we could do the main business features as well. So let's do two things. So I'm not sure whose have I graded. I have graded Brandon's activity, and I have graded Eileen's. Is Eileen still here? Let me check. Doesn't look like. Oh, well, okay. So what you have to do, oh, she is there. So Eileen, may I pull up your assignment really quick and show the class how to do this next upcoming? Thank you. Thank you very much. I will do that. There it is. So Eileen did her ratio analysis, and she's working on Microsoft. Hold on, let me share the whole screen now. Go back, stop share, share screen, the entire screen. Yes, please. And so can you now see Eileen's assignment?
Yes, sir.
Awesome. Now, basically, the part where, well, well, this was not asked, so you're good. I'm going to pull up the other one then. Okay. Hold on. Oh, stop share. Let me pull out stage 2. Just a minute. Stage 2. 1, 2, 3. There. So now I'll resume sharing my screen. No. Balance sheet and income statement. There. All right. Let me go back to sharing my screen. Share screen, the entire screen, share. Now, I'm sure you can see the balance sheet income statement assignment that you all did, by the way, right? And out here, now Eileen missed on the market value ratios, but that's fine. That's not what we're looking for. We're looking for this financial leverage, essentially the debt to equity ratios. Let me make that bigger, 100%. So what you're looking at is the debt to equity ratio. So what is the main source of their capital? Is it debt or is it equity? In this case, it clearly seems that Microsoft is leveraged 2 times debt to equity. So B by D. So B by D, yep. Wait, so this is, let me just go back. Yes, so let's see. This is B12 by D11. B12 is total assets divided by D11. Now let me just explain what I'm trying to say here. So if you have total assets equals total liabilities plus owner's equity. Now, assuming that total liabilities are only long-term debt, it's going to be equal to LTD plus OE. That's total assets. And so the ratio that we are after, what you have given in this is LTD divided by TA. If LTD is high, then OE will be low. In other words, the company is highly leveraged. And so that's what you're exploring. This ratio, ideal ratio is a half. Now, how far beyond the half are we? So in other words, the TA to, not JA, I'm sorry. TA to LTD, if that is equal to 2, the reciprocal of a half, that means it's too high. And in Eileen's case, in Microsoft's case, it is a little bit high. That's all you're looking for in this leverage situation. So let's go back here. So it's 2.8. It's not too bad, but it's a little uncomfortable. In other words, total assets are more than 2 times more of the long-term debt.
Professor, quick question.
Yes.
So when you mentioned that the ratio should be closer to 0.5, Is
Or
that in
think-
respect to only long-term debt, or can it be any type of debt?
Basically, so, okay, can you see my paintbrush again?
Yes.
Okay, so your total assets are primarily consisting, are actually funded by, you can buy your assets with the help of, okay, again, misconception among some students. How do you purchase your assets? You purchase your assets by issuing bonds or stock.
Right.
Okay. So essentially, I have only 2 arrows, but I have 3 arrows. I mean, I have short-term liabilities, I have long-term liabilities, and I have equity. These are my 3 arms on which my total assets rest, right?
Right.
Now, again, if I'm a reasonably good company, I will not trust my short-term liabilities. I need to pay them off, right? So in the long run, I will have to depend on my long-term liabilities and owner's equity to fund my assets. The ideal mix would be half-half. Half long-term liabilities, half owner's equity. In which case, your total assets to long-term liability ratio, or the leverage, should be 2. Anything more than 2 means your owner's equity is too high. Your long-term liabilities are too low. If your long-term liabilities are too low, the leverage will be too high. So you need to increase your long-term liabilities, which is the case of Microsoft. So that's the concept I'm looking for. And if you want, we can discuss this one-on-one again, why we need to have some debt on our books. No, actually, I'll give you one hint of why we need some debt on our books. Look, what is the return on equity? Return on equity is the profits that shareholders expect. So every dollar of equity shares that you issue, Microsoft is giving them 38% back.
Right.
Is
and
this
you're going to dilute that if you do more stocks.
If you do more shares, those shareholders would be greedy. They'll expect that return.
Right.
On the other hand, if Microsoft issues a bond for 10 years, 5%, 6%, it's just less expensive.
All right, perfect. I see.
So that's what you're looking for on the company of interest. And that is the first thing. The second thing is, help me, what did I say the second thing was? The main business features. This is straight away out of Mergent Online. Where is my Mergent Online? Here it is. So main business features are in the highlights. Nope, not highlights, business, I believe. Yep, here. So when you go to Mergent Online, for your company details, in the business tab, you will see all these business features. What is the company doing? What are the various segments the company is operating in? That's it. So you just put it in your own words in less than 100 words. That's what I'm looking for, Mr. Young, on this Thursday.
So just a quick overcap, really, of what's going on in the company?
Yes.
Okay.
Oh, I already stopped sharing screen. So you cannot see where I went, right? Let me show you. So here. Can you see my screen? Company details. In the company details, I have this business tab. Company details, business. In the business segment, it actually gives you a verbal description of what this company is performing in. Simple, very, very simple, okay? So I'll repeat one more time. Company details, business. That's the business. And you can actually roam around. So there's a business segment as well, but it's giving the financial performance in those segments. And that's very fun. I think Miles, your grader for this class, he actually, I remember him putting those charts in the business segments. So you could do that if you like. And there's some information on subsidiaries. I think Intel has that antivirus company, the McAfee, I think. So I wonder if that's a subsidiary. It's not reported here, but Mr. Young, that's an interesting thing for you to find out.
Are you going to open the assignment so we can submit today?
The project submission?
Yeah.
I will be happy to do that. Let me do it tonight. Yes.
Okay.
Thank you, Oko. Awesome. Any more questions?
Dr. J,
Yes.
do you have a copy of, not like an idea or an example of what you want the total report to look like? Like, what
Yes,
should
I do have a
there?
example of that. And if you'd like to see what it looks like, I will be happy to share it, a soft copy of that. If it's already not there, no, it's not in a perfect format. And I don't like to bias you guys with what you write, but yes, I would be happy to share something. Yes, but not this week. Let me just dig out what you need. Right now, we're still in parts and pieces, right? But start assembling them together in a way that makes it a meaningful report, you know, in the sense of cohesion, how it looks like, etc.
Okay, thank you. Sounds good.
Awesome, awesome. And I encourage you to stop by my office hours if you like this afternoon. Oh, by the way, the office hours will be Tuesdays and Thursdays, 2 p.m. to 3 p.m. And I'll be sending out an announcement on that right away as soon as we're done. And we are done. We're out of time now. So thank you, Rohan, for your inputs on the bond assignment. And since this session is videotaped anyways, so I will be posting it on YouTube and sending a copy to you.
Perfect.
Thank you, Professor.
Thank you, guys.
Hey,
Thank
Dr.
you.
J,
Yes, question.
thank you. Do you think this rally is actually going to hold, or do you think it's going to fall like it did last week?
Yeah, well, until we have a permanent fix on the virus situation, we will see a very choppy market. You're right.
Yeah, the volatility's been like 100 to 200%. I've
That's
been
the
watching.
TVIX. The VIX is what you're going to look at for the volatility to come off when you go all in. But by that time, I'm guessing the markets would already have risen a lot. So my philosophy of investing is if you don't sustain the pain, you will not have the gain. For you guys, you're so young. This is like that guy was saying, this is a once in a 50-year opportunity to, to do it, to get yourself invested with some real money in the market. It's not a matter of whether we'll be able to find a solution to this or not. It's a matter of when we'll find a solution to this.
Right, and now buying is so cheap because the market is so down. But
so David Tepper, a hedge fund investor, if you want to Google it, his name is David Tepper, Davidtepper. He's a big hedge fund manager. He started nibbling in stocks starting yesterday. He said the first few stocks that he bought was hospital stocks and healthcare stocks and biotech stocks. So maybe you want to start that way. I mean, again, this class, no investing advice, but what you're witnessing is pretty cool. I hope you enjoy it.
Oh yeah, I definitely do. I'm honestly do more airlines and so long-term airlines and hotels. I mean, these stocks have dropped
Yeah,
like
and so
75%.
yeah, and so if you looked at the stocks of Carnival went up dramatically today. So did the airline index that we saw, and then Boeing has been on a tear since last week. All right, I'm going to wind this up. Thank you very much. Keep the interest going. Appreciate you all, and thank you for coming. Bye-bye.
Thanks, Dr. J.
thank you, Dr. J.